Welcome to Cubequote. 60 things you must never forget before investing in the stock market. 1. Never invest money you can't afford to lose. 2. Don't risk all your available capital on a single stock. 3. Always keep a good record of the operations carried out and analyze the losses carefully. 4. Study a company well before buying it. 5. Diversify it into stocks from different sectors and different countries. 6. Don't take positions before key market events, policies, inflation data, Fed and ECB meeting. 7. Invest in a maximum group of 10-12 stocks at a time to be able to follow them with the necessary attention. 8. Always choose stocks from companies that are market leaders in their sector. 9. Don't consider too much the rumors or advice of a friend. 10. Never fall in love with a title. 11. Learn to know how to lose and above all learn from losses. 12. Never operate against the trend, follow the trend, never anticipate it. 13. Remember that in the long run luck counts for less than zero. 14. Trade in the largest capitalization stocks. 15. Cut your losses by setting strict stop losses and let your profits run. 16. Don't be in a hurry to get into a stock, wait for the next moment. Appropriate. 17. Climb your positions, don't go in or out of the stock market all at once. 18. Turn play money into real money by liquidating part of your winnings. 19. If you want to compare two publicly traded companies, don't worry a lot about their share price, but look at their share price instead. Capitalization. 20. Never get excited about winnings and never get discouraged about losses. 21. Before taking a position on a stock, carefully monitor the volumes, because sometimes an increase in volumes is much more important than a price increase. 22. If you are unsure in the direction of the market, do not trade. 23. Don't sell stocks that you have had in your portfolio for a long time, they may suddenly back in fashion. 24. If you're looking for thrills, leave your bag alone and go bungee jumping. 25. Never be hasty. 26. Don't be greedy, it's impossible to earn so much money in a short time, resign yourselves. 27. Remember that the main qualities of great traders are discipline, trust in themselves and patience. 28. Remember that in the long term investing in stocks ensures the best returns. 29. Don't be impatient, give your actions time to grow. 30. Never buy a stock of a company that you don't know what it is occupy, what position does it occupy in the reference market and from what management is direct. 31. If you want to use options, derivatives, futures, or other financial leverages, you employ only a very small part of your capital. 32. It is impossible to buy at the lows and sell at the highs. 33. Inform yourself in all possible ways, newspapers, specialized magazines, websites, internet, but always with a critical spirit. 34. Don't be influenced by the opinions of your friends. Don't pick a stock just because it has lost too much from its highs. 36. Don't be afraid to buy a stock that has rallied sharply in the last months. 37. Don't expect that all the trades you make will be profitable. What matters is the final profit achieved and not the number of positive operations. 38. Buy small cap stocks only in a period of strong trading and positive trend. 39. Before you buy a share, set the maximum amount or percentage that you are willing to lose. 40. Take advantage of losses to increase your knowledge of the stock market. 41. Remember that you are the key to success in the stock market. 42. Remember that a bear market will take you away in a month what a bull market has allowed you to achieve in 3 months. 43. Expect and accept losses with serenity. 44. Always keep a positive attitude, no matter how much you are losing. 45. Forget about losses and wins even faster. 46. It is much easier to buy a stock than to sell it. 47. Don't be tormented if the stock you just sold at a profit continues to rise. 48. Before borrowing money from a bank to buy shares, calculate the real costs well. 49. Take advantage of stock market crashes to start accumulating quality stocks. 50. When calculating your stock market earnings, don't forget about the costs of brokerage and capital gains taxes. 51. Set yourself goals, and if you achieve them, don't hesitate to sell. 52. Always look at the basic data of a company, turnover, profits, dividends, growth prospects. 53. Remember that the future does not always reflect the past. Past performance is not a guarantee of future earnings, but it can be the best indication you have available. 54. Don't sell stocks where you're making money to keep the ones where you're losing. 55. Don't get too excited about the big gains you'll get. Think about the risks that you'll have to run to catch up with them. 56. Remember that time is the factor that will affect the performance of your investments. 57. It is better to have 1,000 shares of 15 companies than 500 shares of 30 companies. 58. Don't worry about overpaying for a stock of a quality company. 59. Remember that the hardest thing about an investment is not what buy, but know when to sell. 60. When you choose a stock, don't completely ignore the dividend. It will increase your performance. I remind you that Cubequote has started the enrollment of the course Cubequote Method. The course has been structured to bring a person from scratch to financial trader. Now that the Cubequote method is no longer under banking privacy, we propose you to become a shareholder with the greatest possible precision. Avoid all the mistakes of a neophyte. Be aware of what you do. Don't invest even a penny until you have finished the course. You will have clear ideas when we talk about the stock market, and you will be able to understand if a stock should be bought or not. You will find the link in the description. The courses are available in Italian, English, Spanish. Your limit is the sky.